Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
So I'm very bullish Nvidia into January, and here's where I've talked about this before. This 136 is support. We blew through it, but look at that 55. And I said the 155 at the time was 135. We broke below it last Wednesday, and we hit a low of 131.80. 131.80 before getting absolutely defended, closed above, which was critical, that 135. We literally closed at 135.34. And then here's your Friday. Friday we popped up, and here we go. So this is a very nice chart of support. Here's your 10-week, and I had 131.26 as an overshoot, but look at that. We literally just formed a wick and got right back above and closed above the 10-week. I am very bullish Nvidia into January, 160, 170 if we have a melt up, but at least coming back up here. So that means semis at some point should get defended as well. I'm not talking about just this afternoon, right? I'm talking about end of January. End of is a little bit too far. I think mid-January might be a little bit safer, but definitely 2 months out is what I'm trying to still emphasize. Nothing short duration for a 160, 170. I think it's going to take 2 months to get there, but it's doing well, right? This is the 55. It got support at the 55. Remember once it got above the 55, how bullish I was on this? This was September 11th. The market completely moved higher. 55% of the gains were based on Nvidia, remember? It was huge. It was so important. And then I said, hey, we need to stay above this 116. And then we have to get and through the 120 call wall. And then once we get above the 120 call wall, et cetera, et cetera. Anyway, once it finally got above this level, 125, I recommended that financed call spread of selling the 115 put and buying the 136 by 148 call spread. And we got right up here, but didn't get to that 150. Only on earnings did we get above it and then dropped back down, and we're getting supported. So I still like this one. I still think Nvidia is going to do fine. Nvidia is going to do fine. Semis are going to do fine. Look at that perfect tag. It finally happened. How many weeks have we been waiting until it hit that 200-day? And literally Wednesday, shake and bake, perfect. Finally, look at that wick. Came right back and closed above the 200. Friday it was green, and here we are. So yes, I'm bullish semis for the next month, maybe 2, barring any macro trigger that gets us into huge trouble. We still have debt ceiling. We still have January 6th election. Debt ceiling is like end of December. We still have inauguration, war vibes. There's lots of reasons that could interrupt the apple cart. There's no question. But for right now, those are playing out perfectly. Like I just said, the 200-day, we tag and then we bounce for semis, SMH. The 55-day for Nvidia, semis, 200-day tag, that's where you need to stay above. Ideally, we need to get above that 249. And there's the 55-day for Nvidia, need to stay above. SMH is finally leading. Ooh, nice, huh? We got to get back above. There's no question. There's work to do here, but it's a good start to the month is all I'm trying to say, right? Last week, we had a very bullish week, except for Nvidia, which was a great buying opportunity at that 132 area, which was the overshoot level I gave. But 136 is where it needs to base and move higher, which is exactly what it's doing. And really, this is a lot of green on the screen last week. Lots of FANG stocks, some earnings hits. Banks were also predominantly all green, but now that we have an inversion about to happen, that could change. So banks could start to get hit, but for the most part, very positive end of November. Oil patch got hit, and then some select plays, Oracle, Nvidia, etc. But for the most part, we're not into a transition yet. An inflection point of shorting the markets is what I'm trying to say, especially if I'm bullish semis. How do you short when semis are going higher? You don't. So pick your poison. I think the market is still going to be bulled up December at best, January, and then, not a fan. Qs are bid. They're pushing for all-time highs, and very soon they'll be at a 100% gain from the January 2023 high. So right now, they're only about 96, 97%. Still not shabby. And big picture, if we get a melt up, I had to throw a fib on it. I got to do something, right? We're up here. 548 is melt up. I know none of the tariffs have been priced in. War is not priced in. There's so many things that aren't priced in, but the market doesn't seem to care. The bullish impulse is still just complacent. We have more of the same, which is market is not pricing in tariffs, any policy changes of fiscal restructuring, is not pricing in BRICS, and dollar de-dollaration is not pricing in concentration unwind, even though we've definitely had hedge funds lighten up a lot in the Magnificent Seven, or the yen carry trade potential round 2 is not pricing in war. So make hay while the sun shines.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.